Hi everyone, welcome back to the webinar. Hope you're surviving these markets. It has been a crazy time. I'm going to go into that in a fair bit of detail, which I'm going to do right now. And then we're going to get into how the world is really changing, stepping back from things, and how we can hopefully profit from that change. So markets in the first half of this year have been the worst since 1970. This chart shows you that for the S&P 500. Market's down about 20%. That's actually the worst start of the year since 1970. So really terrible start, and you can see the detail in this slide. Global equities in US dollars, down 20%. US down 20%, Europe down 21%. China kind of recovering a little bit, just down 12%, had a terrible year last year. Maybe the economy is starting to recover there. NASDAQ down 30%. We've talked a lot about how expensive stocks have been. We expected them to come back, particularly technology stocks. We've seen that in the NASDAQ, which is obviously the tech index. And usually global bonds also down 10%. Unusual for equities and bonds to fall at the same time. We'll get into that. And then in terms of places to hide, really it's only been commodities, and particularly oil, up 47% in the first half. Obviously the Ukraine war not helping that market, and that market getting very tight and prices going up. Gold has been a relative safe haven, flat in the first half, and then Bitcoin down 56%. Crypto, we'll get into that in a second. I know we've talked about that quite a lot in the past. So what's behind what's happening? Well, first of all, you needed to be in energy. So oil stocks are the only ones which are up in the first half. And you can see information technology at the bottom there, or anything vaguely cyclical, really getting hammered, and particularly technology sectors in the first half of this year. And it's been inflation. We've been talking about this for quite a long time now. We saw inflation coming. It has come. It's been running at 8-9%, up to 11-12%. It's 12% in Holland. And in the US, it's 8 or 9%, and the Fed funds rate is like close to zero. So the Fed is very much behind the curve. We expected inflation. We said the Fed was behind the curve. It's got to hike rates a lot, and that has really spooked markets. And for anything long dated in terms of its likely profit stream, like technology, the further out the profits, the less they're worth at higher interest rates. So that's a problem for the market. And also the market's now gone all the way through to higher rates equals recession. So these are the Google searches for recession. So clearly the market's worried about this, or maybe even stagflation. Back to the 1970s, when we had high inflation and recession at the same time, stagflation, which is a very bad scenario for markets. So within the market, it's interesting to see Saudi Aramco is now, as an oil company, the largest company in the world, at $2.5 trillion, overtaking Apple, a technology company. And that's indicative of the whole tech sector really kind of crashing. So as I've said, if you've got longer dated profits and you're not making profits today, so you're kind of a vision company in the technology sector, then you've been crushed. This chart shows you the Morgan Stanley unprofitable tech index at the bottom. That is down 64% since its highs. The NASDAQ's down 28%. So speculative technology stocks crushed, and crypto fall into that as well, by the way. And SPACs, special purpose acquisition companies, have been crushed, down 75%. These are these shell companies which floated, raised cash, and then bought technology companies, avoided the technology companies themselves having to go through the scrutiny of an IPO. So highly speculative vehicles, and they've been, as I say, crushed from their highs. So it's worth thinking about bear markets, which is what we're currently now in, as money gets withdrawn from the markets as interest rates go up. This is an interesting chart back to 1933. The blue areas are the bull markets and the red areas are the bear markets. And you'll notice, of course, that bull markets last for longer than bear markets. The market tends to go up slowly, and then a bear market is kind of a crash. And we're about 0.5 years into this one, half a year. First half of this year, we're down 23%. And so I guess mercifully, bear markets don't last too long, usually. So the pain doesn't last, forever. And the bull markets, by the way, of course, the percentages at the top are much higher than the bear market falls. So you do make money over time in equity markets. Let's not forget that, if you can live through these difficult times. And we've been talking about the high valuation in equity markets, and that should deflate or should be deflating. And we've seen that. This is the price earnings ratio of the S&P 500, 10-year rolling basis. And you can see in this chart, it got up to 36 times earnings. It's now at 18 times earnings. So the price earnings ratio has halved, in fact. That's partly earnings going up and partly the price, of course, now coming down. So a lot of that speculative valuation froth has come out of the market. I don't think we're quite out of the woods yet, but a lot of that risk factor in terms of valuation has come out. So that is good news. And again, stepping back, longer term, this is always a nice chart back to 1870. This shows you, again, that markets go up a lot over time. This is a logarithmic scale. It goes from 1 to 100,000. So over the century, you've made a lot of money by being in equity markets, but sometimes you have to bear a lost decade of sideways returns. We may be entering another sideways decade. I'm not sure. Possible. But do not lose faith, because equity markets do supply the best returns for investors over the very long term. In the short term, crypto, I should talk about crypto because I must talk about it on the way down as well as on the way up. Interest rates up, speculative money out, crypto comes down. I mean, there's a lot of speculation and debt in the crypto market. So the market cap of crypto has halved from around $3 trillion to about $1.5. It's a little bit less today. Bitcoin has also come down from 70,000 to 20,000. So a lot of pain in crypto. And we did say we would get another chance to buy, well, my favorite, maybe it's our favorite, Ethereum. And this is the chance. It's not for the faint-hearted when this kind of volatility is around. But Ethereum is a lot cheaper than it was before, and this has happened before. What crypto tends to do, it goes up a lot and then crashes and then goes up a lot, but at higher and higher levels. So Ethereum, this is a good chart which shows you the previous peak, indexed to 100 in in blue, and then the current one in yellow. So you can see the rise and then the crash. So Ethereum is down 75%, and we're close to the bottom of Ethereum now, I would venture, unless this whole thing, is not going to work. So Ethereum as a potential buy at this area is, I think, very interesting as a new investment. And I quite enjoyed this tweet from Mr. Dan Held, 2013. Bitcoin crashes to 30. 15 crashes to 300, crashes to 3,000, crashes to 30,000, stroke 20,000. So that's what I said. This is the way crypto does it. You can look at the chart, and this is what it does, progressively much higher levels. So if you are a believer, as I still am, now is a good moment. So what I want to talk about today, and when you get these kind of upheavals, is it just a cyclical recession kind of a thing? Or is something deeper going on, and are we entering a new phase of life? And I think we're entering a new phase of life. And we've touched on pieces of this before, but I want to bring it all together. And I've kind of got the three main themes, and you can look in terms of the subsectors as you wish on this slide. The three main themes would be economic change, where we're moving to higher inflation and higher interest rates than we have done for 40 years. So this is a generational change. Secondly, geopolitics. We've talked about the rise of China, so the East beats the West. And thirdly, technology, and technology changing everything in the next decade. And I want to run through these each in turn. Inflation. Yeah, this takes you back to, again, 1870. This is inflation through time. This is probably this is global data. And it says, except for wartime and the 1970s, inflation tends to be low. That is true. I think we could be going back to a 1970s decade. 1970s were oil price shocks. We've got oil price shocks right now. And they were characterized by social unrest and strikes. We've got that now. And not much talked about, the Fed ran a very loose policy for a long period of time through the 1970s and stoked that inflation. That's exactly what we've had now. The Fed has been loose for way too long, zero rates for way too long, and it's been quantitative easing, pumping money into the economy, printing money, putting it into the economy for way too long, and to way too large an extent. The Fed's balance sheet has gone from $1 trillion 12 years ago to $9 trillion. That's about half US GDP today. That money's got into the economy, and it's created these asset bubbles, and it's created too much demand, and that comes through ultimately in inflation. So I think we're going through a shift. We need to get used to the fact that inflation is going to be higher and interest rates are going to be higher than they have been during most people's lifetime. And that means interest rates need to go up quite a lot. This is a really interesting chart, if you can get into it. It shows all the countries on the left. Third column along, it shows the central bank rate, so interest rates today. And you can cast your eye down, those are generally quite small numbers, so rates are very low. Next to it, it shows CPI, inflation, which is generally quite high. And then the red one is the difference between inflation and interest rates. So generally, interest rates are way below levels of inflation. And if you want to bring inflation down, you need rates higher than inflation. So the dark red one is hike, 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 up, up, up. Interest rates are going up, but they need to go up a lot more. That's the message. And that's going to hit certain areas of the market pretty hard. House prices, I would be actually very bearish on now globally. They've gone up a lot. It has been a bubble. This is the US, this is inflation. And this housing bubble is going to burst. I think it has to as interest rates go up. So that's going to be one area to be mindful of in the next few years. As part of this inflation story, globalization to localization. What drives globalization? This chart tries to show it. Multinational companies operating all over the world, technology, capital mobility, labor mobility. So that is workers in China supplying goods into the US, transportation and lower tariffs. All those things are reversing now. So localization is happening, partly because of COVID. People want to control their supply chains better or more nearer where they are. And nationalism is coming in. Make America great again. So people are onshoring. So cheap Chinese goods have kind of gone, and partly that's because wages have gone up a lot in China as well. So that all means that this suppressant to inflation of globalization is not a factor we can count on anymore. And global trade, world exports as a percentage of GDP is peaked already. So this move away from globalization is not a 1 or 2 year phenomenon. It's actually going on for some time. So again, that kind of helpful suppressant on inflation is going away. Demographics. Gosh, I'm hurtling through these. Demographics. All right, this is how quickly the population is growing and how old your people are. This is an interesting chart, I thought. This is world population growth in red. Population growth peaked at 2.1% per annum in 1970. Wow. It's actually been coming down since. And by the end of this century, it'll be flat. So the population will grow from 7.5 billion to 8 billion today, I think, to 11 billion and then stop. So population growth is slowing. And within that, kind of inevitably, what happens is that your existing population get older as a proportion of the total. So get your head around this chart. This is the US, 1960, 2060. Old people at the top, young people at the bottom. On the left, lots of young people who can care for the elderly because there's not many of them. On the right, 2060, young people, but lots of old people who are not working, who are in need of lots of healthcare and pension payments. And you've only got so many workers to fund that. So that means your balance sheets in terms of nations deteriorate because you've got fewer workers, more dependents. And that's happening now. That's a big problem. And one coming down the pipe. It also means that you've got fewer workers, therefore higher wages, therefore higher inflation. Again, this is a systemic shift. Look at this in China. Wow, this is the percentage of the population aged 65 or older. All right, UK in red, China in blue. And you can see how the UK get to 25%. Look how China's catching up. So 25% of the population in China will be over the age of 65 by 2030. And China's got a particular problem because they have the one-child policy, which doesn't help your population growth very much. They've since disbanded it, but the population are too used to one child. And they're not really spawning more than one child still. And so the Chinese population is declining kind of rapidly in terms of its growth dynamic. And that means that in China, you're going to have much fewer workers as a proportion of the population and more old people. Young workers in yellow, children in yellow. In blue are the working class age, 15, should be 18 to 64, and 65 plus in red. 2020 is the kind of shaded area. So it's happening now. A lot more old people, fewer workers, higher wages, more inflation, systemic shift. Okay, I think that's probably enough on inflation. Yeah, it's going to be a problem. Second theme, geopolitics. We've talked a fair bit about this. I wanted to exhibit how dominant China is and is becoming still in the world order. And this is shifting things. This shows you, so the geopolitical shift is East wins, West loses. China's the world's #1 trade partner, 124 countries compared to 56 for America. China is dominant already as a trading partner. Its sphere of influence in Asia is completely dominant. We've talked about the military presence in Asia as well, and their technology supremacy now over the US. And this is the Asian Infrastructure Investment Bank, AIIB, which is set up, led by China. And these are the members of that overarching banking network, which drive trade and investment flows. And you can see the countries in there in whatever it is, green. The US is not part of that. This is a deliberate policy by China, and it includes many countries in Europe, including the UK and, of course, Russia and South Africa. And Beijing also has what's called here a global megaphone. You know, Chinese influence in Western media is becoming more prevalent. You even see it in the United States of America with Chinese newspapers. That's government controlled. It's certainly happening in Africa and, of course, across Asia. So that soft power grab is also happening alongside what we know, which is the Great Silk Road. We've talked a lot about the Silk Road, $8 trillion investment, by the way. Again, that's half US GDP being spent on new infrastructure. Half US GDP being spent on new infrastructure for China, with tentacles into Africa, Middle East, and of course into Europe and Russia. So, dominance of China. And this relates to China in the sense of the geopolitical shift as well. What I want to get across here is we have a shift from democracy to what I've called autocracy. And China's an autocratic state, and I'll define autocratic states in a second. But when people find themselves in an unequal position, and this is productivity versus real wages. Okay, real wages are flat in dotted line, productivity's gone up a lot. So the ordinary worker has not had a real pay rise for 50 years. Can you believe that? I showed a chart like this last time, which showed the bottom 90% flat, no real wage increase for 50 years. Top 10%, wealthy people, doubled. Inequality. You get social tensions, you get social unrest, and people look for a strong leader or national government to lead them to the better world. And as inflation comes through, and as interest rates go up, and as gas prices go up, and your utility bill goes up, which is happening everywhere, you increasingly look as a population for some savior to help you. And you turn to strong governments. And we've seen it a little bit with Trump, a bit with Boris until today, strong leaders. And we're certainly seeing it in the extreme of that, which is autocratic states, including China. So this is a Chinese dominance theme, and it's also a political theme in terms of how the world is changing away from democracies. I want to spend a moment on this. I was a little bit amazed by this map. In red are authoritarian states. So cast your eye over that. In red, China, of course, on the right. Russia, of course. Saudi Arabia, Egypt, many states in Africa, Cuba, of course, on the left, Kazakhstan, all the stans in the right of Europe. So it's kind of a lot. So authoritarianism is kind of ripe for growth as an extreme political solution, and you get socialism kind of on the way to that. But let me deal with authoritarianism first. I got a few slides on this. I thought they were interesting. And it describes authoritarianism in a very interesting way in terms of what's happening in the world right now. Okay, this is like a lecture. Authoritarian state, a system of government that puts order and obedience to the regime above the personal freedoms of its citizens. This is a perfect example of China. Your personal liberty, the fact you've got facial recognition, that's subordinate to the benefit it gives to the state in terms of controlling society. That is the definition of an authoritarian state. One legal political party, no constitutional responsibility, and a very strong leader. There's a few of these, interesting. Characteristics of authoritarian states. Okay, again, think China or Russia as the obvious examples. No freedom of speech, no freedom of assembly or movement, no freedom of travel abroad, think COVID. No independent judicial system, certainly not. Censoring information, no opposition, and a leader whose popularity is reinforced by a personality cult. President Xi, his teachings are taught throughout schools in China from the age of 10, and he is the great leader. How do authoritarian states come about? Second bullet point. They're usually the outcome of wars. We've got one. Economic collapse. We kind of got one. Ethnic strife. Yes. Deep social divisions. Yes. And class conflicts. These stresses can lead to a sense of hopelessness or despair. A fear for the future, concerns about society descending into chaos. Think about our conversations about society, how polarized it is, how chaotic it feels. In this context, people are attracted to extreme solutions. Think Germany in the 1930s is exactly what happened. Hyperinflation, social strife, the need for a strong leader to restore hope and order. Yeah, that's what happens. I don't be too bearish, but I see strands of this all around. And finally, authoritarian states control all aspects of life. Everything's subordinate to the control of the party, and propaganda is rife. Yes, in China, yes, in Russia. This is all through social media. We are also subject to propaganda in the West through social media outlets. Propaganda is everywhere in terms of our social media feeds, as one example. And foreign policies, like the successful waging of war, can enable authoritarian states to attract support and consolidate their power. That's precisely what's happening in Russia right now. So yeah, geopolitical and political shift. Okay, on to brighter things. Technology. So I've made the case for higher inflation, higher interest rates, social kind of disorder, unrest, chaos, move to stronger government. Outside of all of that, technology, exponential improvements in technology continue apace. That has not gone away. And by the way, through the whole crypto crash and the NFT crash and all Metaverse crash, the people I speak to, there's an enormous amount of work still going on in terms of building the Metaverse, in terms of designing and selling NFTs and creating NFTs. And they do need things like Ethereum to back them. So it's like the crash of 1999, 2000 in tech. Prices collapsed, but the internet went on, and the strongest players survived and prospered. So Amazon went from, I don't know, a $20 billion company to a $1 trillion company. It was the winner. So that's happening in crypto right now. Anyway, technology. This is the way technology works. Early stages up to point number 1 in terms of growth. It looks linear, or it looks like it's going nowhere. This is exactly what's happening with these virtual reality goggles. Who's going to wear those? That's never going to work. It's crazy. It's never going to work, the metaverse. Exactly what we said when mobile phones first came out in the early 90s. Huge clunky bricks. It's never going to catch on. It took like 5 years before they kind of got the technology, and then it started to move, which is point number 2. And then people kind of hope it's linear. You know, existing corporations who are going to be disrupted, they kind of hope it's linear. That's the yellow line. And then disruption happens. It just explodes. And the iPhone was the moment where that exploded. And technology just changes everything we do. I won't get into how the smartphones change our lives, but I think we're all aware it has in every conceivable way. That's the way the metaverse will work in terms of its disruptive capability, because it's exponential growth, and we underestimate exponential growth, as I think we all know. And this is another example of that, DNA sequencing. Where is this? 20 years ago, they sequenced the human genome for the first time. $100 million to sequence the human genome. $100 million. That is now, you can now get your DNA sequenced for $100. There's a new startup just doing it. It used to cost $1,000 last year. It's now $100. And you can have your DNA sequence, which means you can have targeted medicines and all those good things, which partly will help you live longer, which I'll get to in a moment. And this is just a final kind of hammer it home thing on exponential growth. Time to reach 50 million users in years. Took 64 years for aeroplanes to reach 50 million users, 62 years for cars to reach 50 million, etc. Down, internet towards the bottom, 7 years to reach 50 million. Facebook, 4 years. WeChat, 1 year. Pokemon Go, 19 days. And metaverse applications are even faster. It's a matter of days to reach hundreds of millions of people. So that's what exponential growth means. We've talked about that a lot. And that is the backbone to what's happening in technology, which is going to change many, many things. And the other thing which is going to change everything is tokenization. Okay. This is blockchain technology, which is the immutable ownership of an asset on the chain of blocks, the blockchain, which proves your ownership of a particular asset. So where this applies is an NFT, non-fungible token, where you own your digital art on your gallery. That is yours. It's part of the blockchain. That is your kind of token. It can also apply to normal fine art. So instead of paying, I don't know, $20 million for a Monet, you could buy 1,000th of that Monet for whatever that is, $20,000. We'll be able to split up real assets into little tokens with absolute ownership. This is happening now, and it's tremendously exciting. It applies to, on the left, fine art, antiques, land, technology, gold, mines, real estate, infrastructure projects. So if you're an institutional investor, you can invest in a big infrastructure project in Africa or Australia, or a farm in Australia, whatever it is. And that infrastructure project will go up in line with inflation. Quite nice. But as a personal investor, you can't get involved in that because it's like a $20 million ticket. Tokenization allows you to get involved in it because it splits it down in terms of its ownership. This is going to transform everything and how we own it. That was quick. Okay, the other thing technology is going to change is, of course, our military conflicts. And this is a simple point. It's going to go from physical to cyber. And of course, the Ukraine war looks very physical, and it is. But it's also an intense cyber warfare between Ukraine and Russia in the West. And this is a headline from the UK government website. An hour before the Ukraine invasion, a massive cyber attack by Russia across Europe of disinformation and ransomware. And this is the timeline. Don't try and read this. I try to. This is the timeline of some of those cyber attacks. So technology will enable cyber military wars to happen, which is the way warfare will be waged in the future. This is a little bit of a tech point, but I stretched the point a little bit. I want to throw in renewables in terms of what's going to change this decade. And I think we know this, but just a couple of facts. 60% of the world's electricity comes from burning fossil fuels, coal, gas, and oil. On the bottom right there, coal is about a third of electricity generation right now. It's always helpful to remind oneself of that. Gas is about a quarter. Oil is not very much. Nuclear is 10%. Hydropower is 17%, remarkably. I had no idea hydropower was so big. It's so big because of China and the enormous dams they construct across their landmass. And China is dominant in hydropower. Solar, wind, and other, pretty small still, about 10%, but growing very fast, as we know. We don't want to get involved. We want to get involved in this thing. So non-renewables in gray. This is the kind of amount added each year. Renewables in yellow. So well north of half now in terms of additional electricity capacity is in renewables. And this is the split of that. And you can see 2012 through to 2018. In yellow, it's solar, and in blue, it's wind. Just look at those two. So solar's behind. Now it's ahead. Solar's massively ahead of wind now. And that, of course, is because technology has driven down the price of solar panels and the efficacy of them to an enormous extent, to the extent that solar panels even work in the UK now, despite the fact they get not very much sunlight. They are actually economically efficient at the house level. You put them on your roof. So solar is becoming dominant. Wind is still growing, still adding things, and hydro is there as well. And guess who's the dominant player in solar? Yeah, China. So these are the additions. On the right there, the gray is the rest of the world, all the way down to the bottom, which is yellow and China. China is dominant in solar panel manufacture and deployment. And by the way, is now the largest electrical vehicle manufacturer in the world through BYD, which is bigger than Tesla. And they are also the dominant manufacturer of batteries for electric vehicles. So yet another example of China becoming dominant in an area where we should be dominant. Renewables are going to be a big theme. And then back to tech, Metaverse. I think we've touched on this, but I wanted to kind of, again, ram it home a little bit. It is still happening, even though prices have collapsed, but they have no bearing on the value of these things right now. And the value of the Metaverse, etc., is in the blockchain, which is supported by crypto, particularly Ethereum. And I think the stat is 90 of the top 100 Fortune 100 companies are actively deploying blockchain technologies across their infrastructure. 90 of the top 100 Fortune 500 companies in the States. So blockchain is being deployed because it's so much better as a record of ownership, or a vote on the middle right there, voting. Your vote will be a blockchain-based vote. The value of your debt on the bottom left will be blockchain-based. So anything transactional is much better as opposed to a legal contract, a smart contract, immutably placed on the blockchain. And this technology can be a bit bewildering, but kind of don't worry. It's like you don't need to know how a mobile phone works to get the benefit. This kind of backed by blockchain technology will be like a little sub thing, and you'll take comfort from that in terms of your agreement. It'll become the ownership method of choice, powered by blockchain. And you don't have to understand how it works, you just know it works. And that's what's going to transform the world. And Ethereum, with some competitors, I get that, Ethereum will be the backbone of a lot of this, in my view. Last one, technology. I talked about DNA sequencing. Technology is driving life longevity, and particularly healthy life longevity. This chart is fascinating. Shoo, okay, 1930s backwards, life expectancy kind of 30, 35 years you'd live for. That exploded. Healthcare, technology interventions in terms of medical care. And that's only accelerating as we have DNA sequencing and CRISPR technology, which cuts little bits of DNA out, which are the bad bits, and replaces them with something else, which are the good bits, and cures you, and cures dementia, and cures cancer, and all these dreadful things, and keeps you healthy as well. There are companies in the States now which are looking to reverse the aging process at the cellular level. They have actually succeeded in mice at the cellular level in making them younger in a year's time than they were, whatever, 3 years ago, or would have been in 3 years' time. I can't remember which way around that is. But it's an anti-aging property. So at some point we could actually reverse our aging process as well as live potentially forever. For this to work, this is healthy life expectancy. Years lived with disability, red, healthy life expectancy. So life longevity, healthy life longevity. For this to work, you need to live in a rich country. Okay, this is healthcare expenditure per capita. So countries which spend a lot on healthcare, along the bottom, low to high, and then your life expectancy at birth, bottom to top on the x-axis. So if you live in the Democratic Republic of Congo, tragically, you would, not as tragic to live there, but you would only live to 55 years old because they spend very little on healthcare. If you live in North America, you can live to 80 now. 80 versus 55. You can live 25 years longer because you live in America versus Africa. It's unbelievable. And this is particularly true as well, of course, at the GDP level. High healthcare expenditure requires high GDP per capita along the x-axis, sorry, along the bottom there, GDP per capita. Rich countries on the right, poor countries on the left, life expectancy up the chart. DRC left, sorry, 60 years old. Look at United States, 80 years old. Look at that on the right. Japan, 85 years old now is the average life expectancy. Switzerland is 85. So again, that is a 25-year delta between the two things. It's utterly tragic, but money matters. And at some point, our kids will live forever. That's going to change things. All right, final slide. How do we invest for this kind of a world in my last 5 minutes? Any questions flicking through? But I think we might be close to time anyway, and I hope this is helpful. All right, I've summarized this up. So think of the buckets: higher inflation, higher interest rates, different economic environment, different geopolitics, lots of tech. Inflation hedges, gold, we've talked a lot about. Central banks are now buying gold, partly because of the Russian crisis. So bullish on gold anyway, and as a store of value in troubled times and high inflation times, well, you can't beat it. 2 centuries of markets have proven that. Real assets, which go up in value as inflation goes up, they tend to be inflation linked. So infrastructure, forestry, maybe even real estate. And again, in a tokenized economy, we as individuals can buy into that. It's going to be very cool. Index-linked bonds protect you from inflation in terms of the embedded nature of inflation protection. So that's another asset to hold. And by the way, before I go on, you know, in terms of a general investment strategy, I always say a multi-asset strategy is best, a balanced fund. Within the balanced funds we run, we take all these things into account. So we're taking these things into account when we invest for you. So in a sense, you kind of don't have to do anything, but you can add these layers if you'd like to. Renewables. Again, tokenization will allow you to invest more in renewables directly. Solar, wind, and hydro, that's only going to grow. Exponential technology, global technology thematics. We've been busy still working on a fund for this. It's taken longer than we thought, but I'm glad it's taken longer because I thought technology would come back. And we're hoping to get a good entry point in that later this year or into next. Capturing all these global technology trends. I'm very excited about it. China dominance. How do you play the China dominance theme? Is China investable directly? I don't really know if it is or not, but I don't trust investing in a communist economy or communist political environment whose values are very different to a capitalist investor. That makes me nervous. So let's find companies which service China and its growth in Asia, which have more sensible governance and capitalist models. I think that'll be very interesting. Tokenized ownership in the metaverse, we've talked about that a little bit. Ethereum, don't lose faith. Now is the time to get involved if one would like to. I am, but it's not for the faint-hearted. It will continue to be volatile. So, you know, don't put a lot in, but I think it's part of the picture for the next decade. And finally, life longevity and demographics, global healthcare. People are living longer. Biotech will drive technological change, which will help that, and people will make money out of that. And we're going to need a lot of healthcare because people are getting older. There's more old people as a proportion of the population. So healthcare is going to be a growth area. So those are the sleeves which I think add interest to a multi-asset portfolio. Okay, that was a fairly long, very quick run through. We're up to our 40 minutes. I hope it was helpful. To take away, we're in a generational shift. Economies are going to be different. We're going to have higher inflation and higher interest rates. Let's get used to that. We're going to have different politics and geopolitics, aka China. And technology is going to disrupt everything we know and do over the next 5 and 10 years. And it's going to be enormously exciting. So I'm very, very bullish about that. Okay, thank you very much indeed. And I'll see you next time.